Elon Musk and accounting for advertising expenses. This is Ken Boyd. So there's some aspects of advertising that Elon Musk doesn't like. Here's a quote. I've had an aversion to advertising because there's too much trickery, Musk said in a Tesla shareholder meeting in 2019. They'll have a bad product and then put it in a nice environment with good-looking people, and then they trick you into buying it. So there's a lengthy Wall Street Journal about Musk and Lyndon Yaccarino, the new head of Twitter he hired to sell advertising. Musk has long harbored a disdain for the hard sell, preferring that products sell themselves. And as a result, his businesses have long prioritized engineering, building a better product over marketing and sales, which brings us to Twitter. The challenge for Musk is Musk owns a business that drives nearly all of its revenue from advertising. The New York Times reports recently that advertising made up 90% of Twitter's revenue. With Tesla and SpaceX, on the other hand, Musk might be an advertising buyer, but he's an ad seller at Twitter. So the question is, how do ad buyers account for advertising expenses? And it starts with the matching principle. This accounting principle states that revenue is recorded when earned and expenses are posted when incurred to generate revenue. They're matched or paired up, revenue and expenses. So here's an example. You owe employees $5,000 in payroll in the last few days of May, but you're not going to pay payroll again until June 3rd. On May 30th, you record $5,000 in payroll expenses and $5,000 in wage payable. The question is why? Well, it's because payroll expense was incurred in May because you had employees hired to generate more revenue in May. So we need to match the revenue with the expense. When you pay payroll on June 3rd, you decrease the payable balance, you don't have payable anymore, and you reduce cash. So it makes sense. Well, what if you decide to pay for $150,000 to run a Dorito commercial on an NFL game in mid-October? You spent the money in October, but how do you match the expense with the revenue, which is chip sales that you generate from people seeing the TV commercial? Well, you can't. So you apply in accounting the principle of conservatism. This principle says that when in doubt, recognize expenses sooner rather than later. Accountants should also delay recognizing revenue until there's good evidence that the revenue is earned. Expenses, on the other hand, should be posted sooner if there's no evidence that ties the expense to specific revenue. So recognize expenses sooner if there's any doubt, recognize revenue later if there's any doubt. And the result is that net income is more realistic. The income statement leans toward less revenue and more expenses, which is conservative. Since you can't connect the TV commercial to a specific amount of Dorito sales, you expense the advertising dollars in the period that you spent the money, which is in October. So that explains how we account for advertising expenses.